The West is using the leverage of the COMEX and the LBMA to control prices, and they're using it against us. When the COMEX was designed all these years ago in '74, right after the day after President Ford allowed gold to be made legal again, they needed to control the price. So they came up with the system, and the system was, we'll create fake gold and fake money to buy it. What I mean by that is that they rehypothecate. As I mentioned, right now, silver is rehypothecated like 1,700%, and gold's a little bit less than that. But the point of it is that what they do is, back then especially, you first have to understand that no one really ever stood for delivery.
In today's news recap, silver leads the breakout for gold, but resistance looms. Soft U.S. retail sales data has rekindled hopes that the Fed may have more leeway to cut rates sooner than they're letting on. This has provided a nice bounce for metals, with many now waiting to see if momentum can be sustained when U.S. traders return to their desks. Silver is up 2.3% and at a 9-day high after breaking back above $30 near the end of the session. After a bit of a delay, gold is now catching a bid and is up 0.6% ahead of the European Open. Given we're hours away from two central bank meetings, sentiment can easily shift. If metals are rising on dovish expectations for the Fed, they could potentially give back some of those gains if the Bank of England or Swiss National Bank are not as dovish as hoped. Silver technical analysis. Current high has stalled around trend resistance. This is a bullish breakout from the consolidation around the 50-day EMA, so overall it appears constructive for further gains if or when resistance is cleared. The 1-hour chart also shows that the daily high lands around the prior retracement, which adds weight to the case for an interim top. Lastly, the daily RSI is now within overbought territory, along with the 4-hour RSI. In the hours before silver broke out, gold looked like it wanted to break higher, and if it did, it was not a breakout to be trusted. The price action of the last couple of hours has done little to sway this opinion. Gold's breakout is lackluster in comparison, meaning bulls are driving prices higher with less conviction. With the monthly pivot point just above $2,350, any move towards this level could attract bears seeking to fade the upward momentum. Now, we'll show you the latest clips of the latest interview, but first, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
1% of the contracts issued would stand for delivery. It was used to hedge exposure for producers and farmers and all sorts of things, where you would, hedge wheat when you plant a field in April and hedge its production into September when it's harvested. When the farmer or the baker can buy the contract in September with a guaranteed price, and the farmer can sell a contract in April for delivery in September for a guaranteed price, and everyone wins. And anyways, but in terms of gold and silver, it was, they didn't want to let it get out of control. It was after the London gold pool, so they didn't want to let it get out of control because it signals the weakness in the system. So the system that they would create would be like this. When I say fake gold and fake money, like if I have $100,000 in my margin account right now, it costs about $8,000 in my margin account in order to buy a 100-ounce gold contract. Now, I don't have to spend that $8,000. It just has to sit in that margin account. And if the price doesn't go against me, I never pay for it. The trade itself, or unless I take delivery, the trade itself is, a few bucks, just like any trade. But the margin account is what allows me to control the silver and the gold. So gold in this case. So if the COMEX says, look, we can sell that one contract 100 times to 100 different people, no one ever takes possession of it anyway. They'll pay us for it. We'll say, okay, you own it. They're never going to take possession of it. And all you got to do to pay for it is have money in your margin account. So they don't even have to pay for it. It will create all of this volume in contracts that allows us to control the price. No one ever stood for delivery, but that's changing now, you see, and the suppression through rehypothecation or manipulation of the contracts is ending because you're having all of the countries say thank you. I appreciate that. See, because now India and China are not third world. They're industrialized, rich, and savvy. And they're saying, wonderful, thank you so much. I'll stand for delivery. And the LBMA has about the lowest amount of silver they've ever had, ever on hand. The COMEX is watching 400 million plus ounces be bled out over the last 2 years. And the whole system is being bled dry using the suppression of the West. I want to read to you something to prove that they understand this. This is something that I've said on your show a gazillion times over the last year plus about how that they're going to issue a BRICS common currency at some point, and that it will be pegged to a basket of currencies and a basket of commodities. We've said that. Sergei Glaziev has told us that for 3 years. I've said it on 1,000+ podcasts, and it will happen. Didn't happen in August, might not happen in October. Maybe it will, the October meeting in Russia, but it will happen eventually. Until then, what they've been doing, by the way, just to digress for a moment, they trade with their local currencies instead of using dollar to settle. China just canceled huge amount of thousands of tons of wheat from Australia and the United States. They're now buying it from Russia and Brazil. Don't align with them, they'll take it from you and they'll confiscate it if we don't align ideologically. So much so that they've just developed the BRICS grain exchange, where, before I finish on what I was going to say, the one thing they say about the BRICS grain exchange is that global prices are determined by the Chicago Commodity Exchange. Moscow and China seek to move away from trading grain for U.S. dollars in favor of the national currencies of BRICS member states. Well, China just canceled these massive contracts last week with Australia and the U.S. farmers, buying it from Russia, buying it from corn and soybeans from Brazil instead of the U.S., paying in yuan instead of U.S. dollars. And then those countries, instead of stockpiling those currencies, which would have been dollars, they switch it into gold on the Shanghai exchange, take possession instead of buying treasuries. This is happening right out from underneath us. But to prove they know what's going on, I'm going to read to you something. So there was an article that came out. Another finance minister, a Kremlin aide named Yuri Ushakov, came out and he said, look, we are indeed developing a currency. And the idea of the currency is that there will be two baskets. One basket of national currencies of the countries involved, one basket of commodities. And of course, they mentioned that it will be digital, in the digital form, which means it can be used without the banking system, just like the Project M Bridge that they developed, which we just saw the first ever cross-border payment for gold using the digital yuan. It sidesteps the SWIFT. They can go and not be, have to go through the intermediary banks of the West. They can go right on Project M Bridge, trade their digital currencies with another currency to buy the commodity and accept digital yuan. So in any case, or any of these digital currencies. So in any case, here's what he says. So we know, we've talked about a basket of currencies and a basket of commodities. That's nothing new. But how about this? And I've been saying this for 3 years, and it's coming, and you can see they know it. Second part is price. For the moment, price is determined by Western speculation. For the moment, price is determined by Western speculation. We produce all of these commodities and we consume them. I mean, China produces more gold than anyone in the world, and they're the largest accumulators of it, right next to India. And so, we produce, we consume, yet we do not have the ability to, but we do not have our own price mechanism, which will balance supply and demand. Now, let me stop there for a minute. What did I tell you about the way the COMEX was designed? If it were done one-to-one, supply demand would be balanced. But instead of doing it one-to-one, they rehypothecate the shit out of it, over leverage it, create more and more contracts to control and suppress the price, right? It's not one-to-one. The rehypothecation right now in silver is like 1,700%, not one-to-one. So we produce, we consume, but we do not have our own price mechanism, which will balance supply and demand. During the COVID panic, the price of oil fell to nearly zero. Now, as I've said on 12 podcasts this week, we know that's wrong. It went to negative $40 a barrel because all the tankers were loaded with oil. During COVID, they couldn't get into the ports, so no one wanted it. How about we'll pay you $40 a barrel? This is what happens when the futures control the price. The speculators, the gamblers, they create distortions. So he says it fell to nearly zero. He's wrong there. It was negative 40. But he goes on to say it's impossible to make any strategic planning for economic development if you do not control prices of basic commodities. Here's where it gets good. Price formation with this new currency should get rid of Western exchanges of commodities. Read that one more time. Price formation with this new currency should get rid of Western exchanges of commodities. So they understand what we're doing. They understand that we are suppressing the price of gold and silver, but they're using it against us. And I've been saying that forever. Like jujitsu, you use your opponent's leverage against them. They are using the suppression of the Western paper market to drain the COMEX, to drain the LBMA, to drain everything. And now, after they've been very effective at that, now they're doing arbitrage, where they're turning up the heat, where the price of gold and silver are priced much higher in Shanghai, $3 higher on silver, and it opened up 7% limit up on Monday. Didn't do that here. So they're pricing it higher there to attract the traders who have access to all three platforms, Shanghai, LBMA, and COMEX, and to buy on the West and deliver to the East for a premium. That shit ain't ever coming back. Never. And they're slowly, methodically doing it the right way. And I always say logarithmic decay. That's going to be the next tattoo, little by little, then all at once.
In the labyrinth of global finance, gold and silver continue to shine as beacons for investors seeking stability and opportunity. Amidst ongoing economic uncertainties, gold remains a stalwart asset, its value bolstered by rising inflation fears and geopolitical tensions. This traditional safe haven is witnessing increased demand, with central banks actively accumulating reserves to hedge against potential currency devaluation and inflationary pressures. Silver, often overshadowed by gold, is carving out its niche, driven by significant industrial and investment demand. The metal's dual utility, essential in both industrial applications like solar panels and as an investment vehicle through ETFs and coins, provides a unique hedge against both economic fluctuations and sector-specific downturns. This has led to a robust performance in the silver market, reflecting a complex interplay between its role in technological advancements and its monetary heritage. The COMEX Commodity Exchange Inc. offers intriguing arbitrage opportunities that astute traders are keen to exploit. Disparities between physical silver prices and futures contracts create profitable scenarios for those who can navigate these waters. Arbitrageurs typically engage by purchasing silver at a lower spot price and simultaneously selling futures contracts at a premium, capitalizing on the price differential. This strategy, while sophisticated, underscores the nuanced understanding required to leverage inefficiencies in the precious metals markets effectively. Now we'll show you more clips of the latest interview, but first smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
So when we talk about India importing all of this silver using the suppression of the brain dead West, they know it. And they know that at some point, no one will be stupid enough to trust the Western price and deliver at those stupid prices. And that's when, boom, the COMEX and the LBMA bust. And that's when the new price is set on a cash and carry basis in Moscow, in Dubai, and in Shanghai, and other parts of the world that accumulate and produce and respect these commodities for what they should be. And it won't just be precious metals. It'll be commodities or soft commodities like corn, like wheat, like the new BRICS grain exchange. But how about the fact that they own the LME, the London Metals Exchange, which isn't precious metals, it's base metals, steel, copper, aluminum, zinc, nickel, all that stuff, right? So they own it. They own it. And now they want to start putting the warehousing of all of these metals traded in London on the LME in China. Do you see a problem here? Do you see what they're doing? They're going to buy up all the grain and all the wheat and all the corn and the soybeans. They're buying all the base metals, the copper, the aluminum, the steel, the zinc. They're buying all the precious metals. They're going into Africa. They're going into South America through the Belt Road Initiative, and they're striking deals. And those deals are mutually cooperative. We will come into your country, which is unindustrialized and third world, and we will help you pull your natural resources out of the ground. We will build railways and roads and maritime channels to help you deliver it. We will industrialize your country. We will enrich it, your country, and we want to cut. That's how business is done. Mutually respectful, mutually beneficial. We go in with a gun to someone's head and coercion and make them do things that they don't want to do, when China and this new growing union of countries is doing it a different way. They are doing it in a mutually cooperative way. And I mentioned to you that we saw that first in 2023, late 2023, like in November, December, the first ever cross-border settlement for gold using the digital yuan. And remember, we've talked about the Belt Road Initiative for a very long time, right? What is it? It's 150 plus countries. Right now, 75% of human population, 50 plus percent of global GDP and growing. And a lot of these countries are unindustrialized. So check this out. Chinese government just launched a new public blockchain infrastructure platform led by the Conflux network. The new platform, dubbed Ultra Large Scale Blockchain Infrastructure Platform for the Belt Road Initiative, aims to create a public blockchain infrastructure platform. This platform will be able to support the implementation of cross-border cooperation projects along the Belt Road Initiative. So you have 75% of human population right there. And all of the deals I have mentioned for years are being settled on the digital yuan, most of them, the contracts that are building out this infrastructure. Now they have the ability, once they've industrialized and pulled all the shit out of the ground and built the roads and the bridges and the railroads and the maritime channels, to pay for it all, going back and forth, sidestepping the SWIFT on a digital system like Project M-Bridge, which cuts the West out completely and totally. And all of the pathways are connecting to the BRICS pathways, like the North-South corridor that goes from like Iran to Russia or to India, past Russia, and instead of going through, the Indian Ocean where you got the U.S. Navy. All of these things are being done, isolating the West. And if you see the little by little, the chessboard, little by little by little by little, look at all the pieces, infrastructure. Look at the 10 countries that have already signed on to BRICS. And one of the countries that has formally applied, I believe, is Sudan. And if you look at next to Egypt and Saudi Arabia and the United Arab Emirates and Iran, they have the entire Red Sea and Straits of Hormuz now covered, the entire thing. They have shipping lanes. They have relationships done mutually beneficially all over the world with the majority of human population. You have the president of Belarus calling for a summit to join the Shanghai Cooperation Organization. See that word cooperation? And the Eurasian Economic Union into the BRICS. I've been saying that for 3 years. The SCO, which both Iran and Saudi Arabia have applied to. Iran is a full member. Saudi Arabia will be this year. They are a observant member last year. Is the largest regional military and financial organization in the world. You put all these groups together with the Belt Road, you're talking the majority of human population, the majority of all the rare earth metals, the majority of all of the soft and hard commodities, and the majority of all the precious metals, not to mention oil and natural gas. It's a situation that is growing rapidly. And the fact that our media doesn't just do a horseshit job of it, they do no job of telling any of us what's happening. And this infrastructure is becoming very impressive. And everyone says, the naysayers, very smart people, will say, well, the bond market, this and the bond, they don't have a bond market. Who's going to trust them? Who trusts us anymore? And our bonds, which have been horrible, no one wants anymore. So instead, they sell bonds and they buy gold, which has no counterparty liability, which has outperformed the bond market, which has a 5,000-year history of being wealth. And the debt of a country in the form of a bond has about that big of a historical precedent of being money or wealth. So this is all happening right out from underneath us. And the thing that scares me, my man, more than anything else is that, and I don't mean to sound conceited or bigger headed than I need to be, and that is that it freaks me out that I've been right about all this stuff and the speed at which it's accelerating. If this doesn't wake people up, and the problem is we don't have millions of people listening to us here on this channel like they do on the Sunday evening news or 60 Minutes or whatever, where they should really tell the world exactly what's happening. And we are being challenged in every way for supremacy, and it's being done in a methodical fashion. Instead of doing it, we got to do it now, got to do it. No. This has been 17 years in the works.
What do you think of Andy's point? Is the East taking over the metals? Will the US dollar officially be replaced by the BRICS nations? Post in the comments section down below your honest opinion on the complex situation we're going on, and watch this video right here because you'll love it. I see you on the other side.